So it is October. What's going on in the housing market? So we've seen some changes over the last few months. One of the bigger things is we've seen some more inventory come on September, October. Nothing dramatic, but we are seeing some more. You'll see in some of the slides that nationally you're seeing a little bit more. Locally it's more than last year, but not a dramatic amount. I think a lot of people are still staying in that low interest rate. If they don't have to sell, it is probably more expensive to rent for some people than it is to own their home. So we're seeing some more supply, but not a dramatic amount. More price cuts, without a doubt. This is usually the time of year that we do see more price cuts. If a property hasn't sold in the spring or the summer months, usually you see some price reductions in the fall. In the state of New York, about 9%, where there's other parts out west that are about 21, 24%, as far as reductions out there. So we're still doing well compared to the, rest of the country, but not as robust as we were a few years ago, which is what the Fed's been trying to do, which is what, we were expecting. When we look at home prices trends vary by area, this is a nice little thing, especially if you're going to sell in our area and then buy in another area in Florida and Texas. In our area, we're probably about 4%, 3 to 4% still price growth year over year, where you take some areas like Tampa is probably the hardest hit, and it's down about 6%. So if you're selling up here, you're still getting some growth. If you're buying in a market that's kind of going down, it is a good time. You're trading that equity and you get a little bit more bang for your buck. So it's something to look at depending on what your plans are and where you're going. We saw with the Feds, lower 25 basis points out there, but their talk was important of what's going on in the overall economy. So inflation is still, at the end of September, was still about 2.9%. The Fed wants to keep that about 2%. So we'll see. Are we getting one more rate cut, two more, or no rate cuts? I think inflation really is going to pull, a big part of it. I think we're looking to see what kind of the tariffs, have effect on, overall inflation numbers. And remember, that's a lagging indicator. We won't see it until it's passed along and consumers are purchasing. But I do think people are still out there buying. I think they're just a little bit more cautious. One of the things that's been great, which I don't know if it works well to the Fed or not, is unemployment is kind of holding steady. It's somewhere in that mid fours, which is a good number compared to what's going on out there. So depending on what happens with inflation, depending on what happens with the unemployment will determine what happens with rates, which then affect obviously our housing market. So the 30-year rates and projections, what is it, now, and what is it, looking to be? Right now, it's probably in that mid sixes. Maybe some days it's tipping back up to that 6.75. I think probably by the end of 2026, we're right around 6%. I think that's the average of where people are thinking. But it's not going to be anything dramatic. We're not seeing fours for a long time. Fives may even be over a year out. So it's something to watch, and I think a lot of that comes in, both from inflation, the jobs report, what the Fed's going to do, based on that 10-year Treasury, and then the spread between the 10-year Treasury and the mortgage rate. So in 2023, the spread was 2.76, where in September 18th, for 2025, the spread was lowered to 2.1. So if the Fed funds was 4%, you got rates at about 6.1. If the if the 10-year Treasury, not the Fed funds, was lower to 3%, then obviously we'd be looking at 5.1. If you look at where it was back in 2023, it'd be almost 3% higher. So we're seeing that move in the right direction as well. And I think that's important for us to watch, as Wall Street kind of calms down and that spread between the 10-year Treasury and the mortgage rates shrinks, we will see mortgage rates come down a little bit. Samir Didheda, CEO of One Real Mortgage, with expectations growing for a rate cut at the Fed's next meeting, this could be just the beginning of a stronger housing market heading into the fall. When we look at it, of course, lower interest rates do create higher demand. Buyers can spend more for the property, take some more buyers off the sidelines. In our market locally, we still have strong demand. And I think if you can afford a property at 6.25, you could probably afford it at 6.5. As long as we don't see any major shifts. So for this time coming in towards the end of the year, like I said, people are still buying. They're a little cautious of what's going on. They're a little bit pickier, is the word of the day, but they're still buying. So I think that's important. When we look at for 2024, total home sales in the U.S. was 4,753,000. The projected for 2025 is 4,817,103. So a little bit higher, nothing dramatic. But what their consensus forecast for 2026 is 5,257,929. So you're looking at that's going to be a big enough jump. That's about a 10% jump throughout the U.S. I don't think we're going to see 10%. I think what you're going to see is as interest rates drop in other parts of the country and prices drop, it becomes more affordable, and you'll see people in those other areas that are now really holding off. They're going to be able to buy. In our area, I think it's going to kind of continue our demand. Hopefully, we have a little bit more supply. I'll take a 5 or 10% more supply next year because I do think that it will move and kind of balance out the market. So, any questions? Feel free to reach out, give me a call, shoot me a text, DM, and we'll figure out what's going on specifically for you.